I'm so happy that you're tuning in this evening. We have, of course, our reporter, Mark Bradley, who's here with us this evening. But we also have a very special guest who is here this evening all the way from Duluth. And I'll tell you, I really appreciate him taking the time and the effort to make it down here. He saw one of our previous programs that we had that was on YouTube, that we posted to YouTube, when we had Dr. David Feinwalks on the program in April of 2013, talking specifically about the misuse of Medicaid funds here in Minnesota by the HMOs. And Mr. Robinson has been working on this issue very in depth and diligently, and is here with different information and, well, to talk about the investigation that he undertook. And with that, I'd like to welcome you, Buddy, for coming on the program. Thank you again so much.
Thanks for having me.
Yes. Now, please introduce yourself to the viewers. Tell them a little bit about your background, who you are, and why was this a topic that was of interest to you?
Okay, well, I'm the co-coordinator of a group called Greater Minnesota Healthcare Coalition, which is made up of 4 member groups. Happen to be, the names are 7 County Senior Federation, Central Senior Federation, Itasca County Seniors, and in Duluth, Minnesota Citizens Federation Northeast. I'm also the staff director there. We used to be part of something called the Minnesota Senior Federation, and back in the 1990s, some of us had concerns about the Medicare HMOs in our state, trying to get extra profits and extra payment that really wasn't justified. And we also learned that apparently they weren't reporting all of their profits, and that some of the books had very creative bookkeeping. With other things, we learned about an audit done by the Attorney General's office, and we started digging more into this. Greater Minnesota Healthcare Coalition came to life in 2004, and with the major goal of affordable health care for everybody. And we primarily represent the economic interests of lower and middle income people. So both in terms of people that use public programs, but also taxpayers in general. And we also learned of some alternatives to how the HMOs were running the public programs. We started to wonder whether money was being used properly.
Because actually here in the state of Minnesota,
Right.
Minnesota outsources some of what the state could be doing to the HMOs, correct?
Outsources most of it.
Okay.
Like over close to 90% of it. We had a role in getting a report done by the Office of Legislative Auditor in 2008, which showed that there were very excessive profits, that expense data was not being looked at, was not being verified, and there were some questions about the bookkeeping. We kept compiling more and more research, getting deeper and deeper into this. So then when the new administration, the Dayton administration, came in 2011, we showed them all of our research. We tried to convince them that they should do retroactive auditing in order to see the truth about this, and very possibly recover money that really should be due back to the state.
And that makes sense to do that retroactive audit, because then you can see what the past practices have been, and if the processes are incorrect, or somebody has been doing something in the incorrect manner, well, then you can correct it, rather than just saying, okay, we're just going to look at where we are today and do a forward thinking. Let's look back at what were those past practices and the past processes.
Yeah, and because we're talking about quite a lot of money, we compiled our research results in this report called Who Was Minding the Store, that we issued in August of 2012, and found things like over $800 million in profits off these public programs by the HMOs since the late 1990s, and over half a billion of that being excess profits compared to what they were supposed to be getting. And also all of that landing up in very high excessive financial reserves.
And typically, I mean, people think that the money that is funneled over to the HMOs is used then for the health care of the people that it's intended for. And in reality, what you're saying is that a large portion of the money actually is going into reserves somewhere else that have nothing to do with patient care, correct?
Right. And what we reasoned was that, so okay, if the profits are coming in like 3 times what they're supposed to be, like over 3% versus 1%, and the information, the expense data is not being verified, then it sounds like that information, that self-reported information, is probably inflated. And if that's done deliberately in order to get higher government money, that is fraud. But like I said, the state officials didn't seem to be real interested. But after we issued this report, the Twin Cities offices of the U.S. Department of Justice and the Health and Human Services Office of Inspector General, they were very interested deeply in what we had done.
Right, because now we're talking about, well, federal money.
Yes.
And they want to know what's happening to the federal dollars.
Right.
And now it's not a state issue anymore.
Or it's both anyway.
It's both, yes.
And you also have to look at that part of that money that is in excess is going to be then determined upon how much the executives of the corporations that are the healthcare will be receiving as their benefits, because that's part of their profit gains. And as we are well aware, the HMOs that are in Minnesota have done very well. In fact, there were some of the highest paid executives in our state are HMOs.
Yeah, a CEO salary, these are nonprofit corporations of $1 to $2 million and up, compared to those county systems that run the programs in some parts of the state getting about $100,000 salary.
Right.
And see, and a lot of times people think that when an organization is classified as a nonprofit, it means that somehow or other that they don't have profit reserves, but it's just really a type of structure used for tax purposes and how they are classified and what tax rates they pay.
Right.
And so, and there's different types of nonprofits, but that's why, again, sometimes people think, well, if it's a nonprofit, well, how could this kind of thing ever happen? And yet this points exactly to the issue that you need to look at accountability no matter what the label is to an entity.
Yeah, and I was going to say, and going back to those federal investigators, so they asked for our information. November 16th of last year, we spent 4.5 hours with 10 federal agents. And 4 days later, the Office of Inspector General from Health and Human Services announced it was going to investigate to basically determine whether or not falsified information was used to set those rates, to pay the HMOs.
And you had mentioned that, a lot of this data that had been reported is self-reported.
Right.
And I think that points to another issue, is that when you have self-reporting and you don't have external reporting mechanisms to really look at the checks and balances, because when you're internal, you can always figure out a way to move those little shells around in the money game.
Right, and some of our research was very, very unique. We looked at public reports of these finances and analyzed them in ways that others hadn't. And maybe more important, we looked at documents that no one else had even been looking at in the archives of the health department.
Really?
No one else had read, even the state regulator people that were supposed to look at them.
And so what kind of documents were you looking at?
Well, the audit reports, the IRS reports, the what are called National Association of Insurance Commissioner reports. Some interesting things we found were that there's a lot of inconsistency between those reports and not even being filled out according to the correct instructions. And again, the state folks are supposed to be looking this stuff over and checking for things like that. So I do want to say, then very importantly, then in March of 2013, a new report came out commissioned by the state, by this outside expert company, the Siegel Company, to raise the question, were those rates set properly or not? Their official report basically confirmed what we had found about the all the profits, the excess profits over what was intended, and they heavily stressed that the information going into this was not verified. The rate setting was very, very, very flawed, and there were repeated, excess overpayments up through into the year 2011.
Wow.
I should say, so what's happened? So the state administration has done some things. We think all of our work had a role in making that happen. In 2011, they enforced for the first time a 1% profit cap, although that got fudged a little bit. We can get into that later. For 2012, they started a bidding process for the first time for the programs in the Twin Cities metro area. They're handing over some of the Medicaid programs to hospital clinic systems, what are called accountable care organizations. They also are going to have, for the first time, a real government audit of these programs, but not starting until calendar year 2014. So we're looking forward to that at long last. The legislature put in some limits on the HMO's administrative spending for these programs and made some improvements in the financial reporting. And result of all this, to date, a few $100 million have been saved by getting out of these excess costs, wasted costs going forward. And even the latest budget forecast for the next biennium talks about another $55 million a year being saved. So a lot has happened. This is all good, but we don't think it's near enough because all of that huge amount from those prior years is being left untouched.
That's right, and going backwards and trying to recapture some of that. And I know that there was this point in time where UCare said, well, okay, we see that we've got some extra this money, and maybe what we'll give it back, gift it back, or there was something about that.
Yeah, actually, I do want to get into that, but actually to kind of set the stage for that, I'd like to give a little of the backstory.
Yes.
That really helps explain all of this stuff. And the key part of this is it's focused on a desire that's been around for a long time by the HMOs and some state officials to get as much federal Medicaid money as they can into the state by any means possible. And this has been a bipartisan kind of enterprise, you might say, particularly with the previous Republican governors and DFL-controlled legislators. So it's kind of a common theme. To explain about this, I just need to first give the viewers a little quick primer on a couple of things. The difference between Medicare money and Medicaid money. So Medicare is the federal program for health care for elderly and some disabled. It is 100% of the government money is all federal. Medicaid is the companion program for low-income people of all ages, and that one, the government money is half state and half federal. So part of the justification, one other thing though, one other distinction. Two kinds of payments. One is called fee-for-service, which is where the doctors and hospitals submit their bills directly to the government for each service. The other kind is called managed care, in which instead of that, the government gives a flat amount of money per month per person to the HMO or whoever is running it. The HMO pays the bills. If there isn't enough money, then they lose money. If there's extra, they get to keep it. It's just like you or I paying a premium to an insurance company.
Right. So they have actually an incentive to run the program in such a way that they get to keep money.
Yeah. And
it sounds like they've been doing that pretty well by keeping money.
Right. See, and part of the justification for this desire is that because in Minnesota, those fee-for-service reimbursements for Medicare are among the lowest in the country. So there's sort of this kind of thing, well, we're getting shortchanged on that, so we feel we deserve to kind of compensate for that by getting as much Medicaid money as we can. That's been kind of the genesis of this.
I was just wondering, what is the impact on the patient at the end, too? Because if they're being told that they're given a fee for taking care of everything, isn't there kind of a incentive for these healthcare organizations to encourage people to stay away from the hospitals then?
Yeah, and actually they have done that. That's the one kind of achievement of the HMOs. They really goes back quite a long time ago of reducing the length of hospital stays. So that was kind of a one-time savings of money that's gone forward since. And so there's an interesting point in time here. Minnesota has some of the lowest fee-for-service Medicare payments to doctors and hospitals in the country, yet the per-person managed care Medicaid payment per person that goes to the HMOs is among the highest in the country. That doesn't seem to make sense because, the cost of medical treatments for Medicaid people shouldn't cost more than those same treatments for Medicare people. And in fact, they don't. In fact,
because it's the same procedures, the same medical facilities.
And in fact, the reimbursements for Medicaid are lower than Medicare. So the answer to this sort of Zen riddle is that the state, when the HMOs have deliberately and very, very successfully gotten a lot more Medicaid money coming into the state than is really justified and actually that is really than is legal. So and that's why we have that dichotomy between the Medicare and Medicaid. Now, but you might say, well, but wait a minute now. If the state is getting extra Medicaid money, above and beyond what it really should get, but Medicaid is half federal and half state. So if the state is getting the feds to pay more Medicaid money, then doesn't the state have to pay extra Medicaid money too? And here's where the brilliance of the scheme comes in. The primary scheme, there are others, but the major one relates to two specific programs, which are, it's on the screen there somewhere, but
and we can put the computer screen up, the character generator, and that way we'll have it on the screen as well so people can see it.
So I'll point these out. PMAP, PMAP, is the Prepaid Medical Assistance Program. I should backtrack that all states, Medicaid is the federal name, every state makes up its own name for its Medicaid program. Here we call it medical assistance. And so we're going to call that, and this is the managed care paid to the HMOs. We'll call it PMAP for short.
Okay.
Right below that, GAMC, General Assistance Medical Care, a different program. We'll call that GAMC. And by the way, I'll be using the...
Right, and that's actually very helpful that you were able to put that on the screen there like that's, so people can refer to that easily as we're talking about. That's great. Oops.
I'll get it back
As
up.
I knock it over, okay, that looks great.
Yeah.
Because so oftentimes you hear all these acronyms, the alphabet soup as you've entitled it, and so that's great. Thank you.
And actually, while we're on that soup, HMO, in case people don't know, stands for Health Maintenance Organization, which is the correct legal name, though they like to call themselves health plans instead. And we're talking about, for the ones in this program, Medica, Blue Plus, which is part of Blue Cross Blue Shield, Health Partners, and UCare. So those are the four biggies to talk about. And while we're at the bottom, one last initial, CMS, which is the Centers for Medicare and Medicaid Services. And that's the federal outfit that dishes out the money to the state. Okay, so with that background, here's the thing. The big scheme was to try to get the PMAP program to subsidize the GAMC program. And
so it really is a shell game, isn't it?
yeah, and this particular shell game, in order to do that, in order to make the subsidy happen, you have to shift some of the costs of GAMC onto PMAP. So what you do is you tell the feds that PMAP actually costs more than it really does, and you tell them that GAMC costs less than it does. And so that way, some of that cost is shifted to PMAP. PMAP is straight, pure Medicaid, medical assistance, 50% federal, 50% state. GAMC is 100% state money. It covers people, the state did a great thing covering people who aren't eligible otherwise, including a lot of homeless people. But it's 100% state money. So the beauty of it is, if you shift some of the cost to PMAP, then suddenly half of that is being paid by the feds. So the state saves that same amount of money.
Right, so whatever they can shift, then they can shift it over to the other to get more funds
Right.
from the federal government.
And we've really pieced together the full story. In 2000 to 2002, the state was overtly putting GAMC costs onto PMAP. But the Federal Office of Inspector General investigated and said, well, you can't do that. Medicaid money can only be used for Medicaid people. So the state, and you must stop in 2003. So the state said, okay, we'll stop. But
Until we figure a new way to do it.
and it didn't take them long because the subsidy continued, but this time in a surreptitious way. And what we believe happened is that the HMOs and DHS got together and said, well, gee, we can't overtly put this on those books anymore. So the HMOs, us HMOs, we will put the subsidy on our books internally, basically juggle the books to have the same effect. But then the state was interested, well, if you do that, we don't really want to have the documentation on our hands. So
we don't want to be caught holding that smoking gun.
right, so I call it a version of don't ask, don't tell. And and also, by the way, 2003, that's around the time that the current executive director of the Council of Health Plans, Julie Berner, started with them. But in any case, what we think happened is not long thereafter, the HMOs figured out, well, gee, if the state does not want to verify our information, does not want to audit it, we could inflate our numbers a little more. And then besides helping the state get extra money from the feds that is not warranted, we'll get ourselves extra money from the state. Now remember that the original motive for the state to collude with the HMOs on this was to get extra federal money to save state money.
Right.
But we think what happened is that they basically fell into a trap and basically ended up shelling out more state money than what they were saving at the federal angle. And
now I understand, not to interrupt you, but I understand we've got a caller on the line with a question.
Okay.
So let's invite our caller to the table. Caller, thank you for calling in. Questions or comments for us this evening?
Well, it's a comment for Mr. Robinson. I would like to thank him profusely for coming down from Duluth to bring this information to us, the public, because our media in St. Paul and Minneapolis doesn't ever seem to cover these kind of things, and if they do, they make it a rosy picture for everybody. The other thing is I'm really disappointed in the state of Minnesota for not following up on the information that you brought to them, and only did it when the feds got involved. But I think the things that you have found so far is probably just the tip of the iceberg of what's really happened. And I still say I thank you very much, and the public in the state of Minnesota should thank you too. Thank you.
Well, thank you, caller, for that those comments, and he couldn't have said exactly what's in my mind as well, because we need to have folks who are watchdogs and looking out to see what's going on, and this is a classic example. Classic example.
And community public access TV has the luxury of not have to worrying about potentially losing millions of dollars of ad revenue.
That's right.
From the HMOs.
Have you seen that with the people that are working the operations, that were doing the manipulations on the paperwork, going to the HMOs as a second job when they left their original jobs?
There's a
Good
there's
question.
a very well-greased revolving door. between the state agencies and the HMOs.
That's what I was wondering about.
Yeah, this Ms. Bruner I mentioned was just before that Deputy Commissioner of the Department of Health, and there's a lot of switching back and forth there going on. I wanted to get back to the point about this the state not wanting to do auditing. I think this history of the collusion helps kind of explain that, because even though this stuff was cooked up and done during the prior administrations, which are a different political party than the current governor, the problem is that if the state were to do this auditing and dig this out, it would probably lead to the state getting fines from the federal government for having done this stuff, even though it was in the past. Plus the other problem is that to sort of publicly expose that kind of puts a damper on the state's reputation of good government, Minnesota Nice, and national leader in healthcare. So that's why there's some, I think, reluctance to go there. Expense is not the problem, because in state statutes, the administration has the power to audit the HMOs and charge the cost of it to those companies.
Oh, well, and that's a good mechanism to have in the laws.
Yep.
So like you're saying, they've got that in place that they could do it.
Yes.
It wouldn't be a cost to the taxpayer, because that they would just move that over to the HMOs.
So I got one other question to ask you. Are they trying to do, again, what a lot of other corporations, when they get caught with their pants down, have they tried to negotiate their way out of these issues?
One thing related to that, because I mentioned those very huge amount of reserves for those excess profits.
Right.
So there was actually a bill in the legislature this year to, I forgot to mention that while these profits were starting to accumulate, starting in 2003 and 2004, the HMOs quietly got the legislature to remove the upper limit on how much money they could keep, their financial reserves overall. And since that time, then those financial reserves ballooned.
Just skyrocketed.
In this year, 2013, there was an attempt to put a upper limit back on and have the excess repaid. And that would have been a way for the state to recover a lot of this money. The House of Representatives passed it, but it was quietly taken out in conference committee by the lobbying of the HMOs. One thing to note, you mentioned about nonprofit status before,
Yes.
and that's been part of the justification, or you could call it delusion, I guess, because they are technically nonprofits, therefore we should assume they have a true public purpose, including one that's prescribed for them right in the state statutes. But if you're actually, if your actions demonstrate that your top priority is to maximize your profits, and also in so doing, instead of lessening the burden of government, you're increasing it, then technically you are violating your nonprofit status. And that's another part of this whole thing. The legislators have patted themselves on the back as we've done a great job of protecting everything because we specify that these have to be nonprofit. But in our view, it's really more like your typical for-profit insurance companies who just, as you said, happen to latch onto this mechanism. And in fact, one of them, Medica, they actually farm out most of their work to their former parent company, the for-profit United Healthcare.
I see.
Right down in Minnetonka.
Wow, interesting.
So,
and and this issue, as you've mentioned, it's in our state. It affects the federal monies. And at the beginning of the program, I had indicated that David Feinwachs had been on one of our programs here and talking about this issue, and he had the opportunity of testifying in front of Congress in Washington, D.C.
there we go.
You said that you felt that and correct me if I'm wrong, that some government people, employees, were working with some providers and causing some of these problems. Is that right?
Mr. Chairman, Congressman, yes, it does appear from what has occurred in Minnesota that some public employees and our HMOs were, in fact, collaborating, if I may use a kind word, in the conduct that we are questioning today.
And that is under the previous administration and this administration? Is that what you're saying?
Mr. Chairman, Congressman, it appears this has been going on for some years. It looks to me like at least from 2003.
Until the present day?
That is correct, sir.
I understand. Well, I just wanted to make this clear, and I hope that, that you can, I'm sure somebody else will ask you some questions, because we'd be interested to know who these people are since you made this accusation. And if they are doing this as government employees, they ought to be fired, but more importantly, they need to go to jail. That's why I'm very careful with those kind of accusations. Finally, let me say this. The reason why I started out by talking about Diamante Driver is because when these resources are going places that they should not go, that is in the pockets of other folks who are probably rich, and every time I think about this stuff, it makes me mad, because I live in the inner city of Baltimore, and if somebody steals a $30 bike, for $30, they're probably going to go to jail, but at least they're going to get a record. And so I want to make sure that some of these folks who are stealing hundreds of thousands, if not millions, get their chance to see their picture on a mugshot.
That's pretty strong language, but the reason I think that it's so important to show that clip is because you were talking about that collusion. And I want our viewers to realize that it isn't just something that you suspect, something that you just might be saying here tonight and that you're alone in this thought. But this is consistent with testimony that was given in front of the United States Congress. Right. And that is a concern of our Congress out there in Washington, D.C., and the Solicitor General. I mean, that's why they've got investigations going on.
I have a DHS email from 2002, internal email, regarding that intervention of the feds about can't do that cost shift. Mm-hmm. When it was explained that we 2 years ago shifted money from GAMC to MA to stay within our forecast figures, he, as the federal investigator, immediately viewed that we were cost shifting from an all-state program to a shared program. Parentheses, I can't imagine why. So for our next contract cycle, we will undo that shift. It'll get incorporated into our rates negotiations with the plans.
Oh, okay. Incorporated into. Well, that just sounds like another way to, we're still going to include it, but we're going to
manipulate.
Do it in a different way.
Potentially. I'll also, for the, to pipe up in Minnesota's defense, many states do these kinds of schemes. Mm-hmm. And unfortunately, the federal government has been very lax watching its own money, most because they've been wanting to trust the states to take care of this. They've assumed that because the states have skin in the game, half of the cost, that the states would protect their own interest.
Sure.
They, I guess, weren't counting on states getting into schemes to get extra money out of the feds. And so I was going to go back to the that you care money, 2011.
Yes,
to
please.
Return to that part of the story.
Yes.
So in 2010, the middle of 2010, Governor Pawlenty ended the GAMC program. No longer existed. Now, DHS, you would think, could have then reduced the payments for PMAP because there's no longer any need for a subsidy for that other program. But they didn't. This resulted in extra windfall profits. Now, Health Partners, Medica, and Blue Plus were very happy to get that. But the fourth one, UCare, got kind of nervous. They're the only one that doesn't have commercial policies, and it's very hard to kind of juggle the stuff among the different lines. And so for them, the extra profit sticks out like a sore thumb. And so that's what really moved them to repay it. Don't believe me. Here's their own words.
Okay, let's hear their own words. I always love hearing their own words.
Okay, so here's their auditors. This is from March 24, 2011. UCARE will be making a voluntary one-time contribution to the state of Minnesota of $30 million. This represents 2010 surplus reserved earned in excess of the Minnesota Department of Human Services intended margin. And then from their CEO, Nancy Feldman, from the company, UCARE, in March 16th to some state legislators. The $30 million represents what we consider to be excess 2010 operating margin for state public programs. Historically, DHS, Department of Human Services, set rates for GAMC that resulted in health plan losses, which were offset by higher medical assistance payments. When GAMC moved out of managed care in mid-year 2010, medical assistance rates were not lowered to reflect this overpayment. So this kind of embarrassment of riches, troubled UCARE, but DHS called it a contribution. And
Not a reimbursement.
right, the CMS, the federal agency, knew that this was a return of Medicaid money, and they should be entitled to half of it.
Oh, yes, definitely.
They pressed the state for that, and finally, after a year went by, then DHS finally gave half of it to CMS. And by the way, just one interesting, again, regarding the media. This was referred to as an amazing, surprising corporate contribution. They'd never seen anything like this. What they didn't quite get right is that it wasn't really a corporate contribution, because what isn't well known is that although UCARE claims it is a private nonprofit, although originally created by the U of M, it's at present its own bylaws and IRS reports show that technically it is still a subsidiary of the U of M.
Oh, really? Interesting.
Yes. And so this really wasn't a corporate contribution. And it raises some other questions about that whole part of all this. Excess profits coming back to the state. With its excess embarrassment of riches, UCARE has donated about close to $90 million or more of its excess profits back to the U of M Medical School.
Oh, yeah.
And this is a way to help, I guess, alleviate other shortfalls of overtly, granted university funding by the legislature. Just like I said, CMS has been asleep at the switch. It's starting to wake up. And for example, even this year, there are some ongoing things that still trouble us, beside what happened in the past. So I mentioned in 2011, when they put the profit cap up, DHS let some of them do some fudging, and which would have resulted in about $25 million more dollars coming back to the state. And then this year, the DHS was arguing with CMS about not wanting to have to audit some new incoming federal money for primary care, and almost endangered not having that money come into the state. And while I said, a real audit will happen for the 2014 numbers,
Right.
for 2011, 2012, 2013, we still know for sure are those amounts based on inflated numbers. And CMS is very concerned about that as well. So actually, what we really need is auditing all the way through 2013, besides just waiting for 2014.
Did I hear we have a phone call?
Yeah, I think that, do we have a phone call? Yes, we do. So let's take our
Sure.
caller.
All right.
Caller, thank you for calling in. Questions or comments this evening?
Hello,
Go ahead.
caller.
Good evening.
Hi there.
Good evening.
Hi. I've been watching, and I'm concerned about all of these tax dollars that are going into the HMO pockets for years and years. What can I, as just an ordinary member of the public, do to make sure that this doesn't continue, and possibly how we can get our tax money back?
Excellent questions. I always like those questions about what can the citizens do.
Well, in terms of getting these audits to uncover or document the fraud, which then gives the ability to recover the money. So there's two angles. Either the governor could choose to use the power in his administration, or the legislature could decide to do the auditing. That would require, appropriating some money, but at least it's another way to get it done. So so there's the governor's office, and there are his key commissioners regarding these things, the Department of Human Service Commissioner, Cindy Jessen, the Health Department Commissioner, Ed Ellinger, which has regulatory oversight over the HMOs. And in the legislature, there are 4 key committees that oversee these budgets. In the House, there's the Healthcare Policy Committee and Finance Committee, chaired respectively by Representative Tina Liebling and Representative Tom Huntley. And their counterparts in the Senate are Senator Kathy Sharon and Senator Tony Lurie. So if people want to urge them to please take up these questions, and even though there's some progress being made, why should we leave hundreds of $millions sitting on the table? I'm sure lots of people could come up with excellent ideas for how the state could use that money in his budget.
Definitely. Yes, that's for sure. Now we have another video from the hearing that David Feinwachs testified at. So let's play that. That's sequence number 2. And this again is from April 25th, 2012 in front of U.S. Congress.
And next I have some special information.
The state has implemented a successful competitive bidding process that has achieved over $500 million in taxpayer savings. Do you agree that Minnesota's move to competitive bidding has been beneficial?
Mr. Chairman, Congressman Ellison, no, sir, I do not. Minnesota's competitive bidding process began with 4 predominant HMOs controlling the market, and after the so-called competitive bidding, the winners were the 4 predominant HMOs. The competitive bidding, as it has been initiated, appears to be nothing more than a market allocation among these 4 HMOs to maintain the mechanism that has been employed for many years.
Also, the state negotiated a voluntary 1% cap on profits for 2011, and this resulted in $73 million being returned to the state. Do you agree that the 1% voluntary cap was a win for the taxpayers?
Mr. Chairman, Congressman Ellison, I believe that the return of money is a good start, but I disagree with the characterization as a 1% cap. Last year, the current administration asked the plans to follow the lead of UCare in giving back money that had been received from a clearly inflated Medicaid rate. They didn't want to do that, so an agreement was negotiated whereby it would be called a voluntary cap. The voluntary cap, of course, is subject to manipulation of administrative expenses in order to achieve the cap and to limit the amount. My characterization of what has occurred in Minnesota is, because we said the word audit, we've recovered $103 million. Imagine what would happen if we did an audit.
Well said. Imagine what would happen if we did an audit.
And if, by the way, if the other HMOs had followed UCare's lead, the money the state would have gotten back by that manner would have been probably over $150 million.
Wow.
Instead of $73 million.
Yes. So now I understand too that you've got some information that is very relevant to Ramsey County as well. So in our last 12 minutes or so, why don't you go into that, because that certainly is relevant to the viewers of our program.
Right. There are 2 aspects to this. One is the notion of Ramsey County giving a bunch of taxpayer money to one of the HMO's health partners with very questionable logic as to why it's really needed. This is it's close to $2 million a year. It's for the purpose of helping to pay for indigent care at Regions Hospital, which that building once upon a time was the Ramsey County Hospital. The operations of it are now owned and run by the Health Partners HMO. So Health Partners has the obligation to do indigent care, not Ramsey County. But in order to find out if Health Partners billings to Ramsey County are valid or not, you need to have auditing done. And by the way, if a majority of the Ramsey County Commissioners wanted to ask the State Auditor's Office to do it, the State Auditor can do that.
And that's really all it takes is a majority of the Ramsey County Commissioners to say that's what they want to do.
The good news is because of some pressure about this from county residents, the board did agree to at least ratchet back, reduce somewhat some of the payment. So that's a step in the right direction. The other thing is something that came to light just very, very recently. One of our members, her name is Diane Peterson, found out something had been going on. This is another one of those schemes to get more federal money into the state. And what it's based on is that public hospitals are eligible to get higher amounts of Medicaid reimbursement than private hospitals. And the way this scheme is done in other states, and also nursing homes, the typical thing is the state gives a higher than otherwise reimbursement to the hospital, more than it needs, and then some of that money is returned, kind of kicked back to the county via what's called an intergovernment transfer from one government entity to another.
Oh,
This
yes.
happens all around the state. We have a special twist here because this is happening for regions, but regions, as we said, is actually not a public hospital. It is the building is owned by the county and leased to them, but the hospital business and operations are owned and run by health partners, part of their very large and well-financed empire. So in order to do the same kind of transfer, the problem is regions cannot directly give the money back to DHS via an intergovernmental transfer because it's not a government unit. So instead, once a month, regions wires $500,000 to Ramsey County, which then in a few days turns around and wires it to DHS.
Okay.
Serving as kind of a money mule, I guess. Some would call it maybe money laundering.
I was going to say it sounds kind of like the description of money laundering from what I know.
Right, and the problem here, now the good news for Ramsey County residents, it doesn't cost Ramsey County any money. They're just funneling the money they got from regions. But the Ramsey County residents feel good about their county participating in this charade and pretending that Regions is still a county-owned and operated hospital when it isn't anymore. Do they think that's proper and ethical?
Right.
The state legislature even got on the bandwagon. In 2009, they wrote into law for this scheme to happen. And what they did was they put Regions Hospital, lumped it together in the same category as Hennepin County Medical Center,
Oh, really?
and called both of these, quote, government hospitals, unquote.
Oh, my
And then
gosh.
specified that therefore Hennepin County would give back money and Ramsey County would give back money.
I see.
The problem is, as we say, Hennepin County qualifies as that,
Yes.
but Regions doesn't.
Right.
And one thing we don't know yet is, so with this extra influx of Medicaid money, who's the true beneficiary? Is it DHS in its budget, or is it going to health partners? A few months back, you might say in the news that the Amplatz Hospital was getting extra Medicaid money authorized by Scott Lights at DHS, and then said they didn't actually qualify for it according to the federal rules. Not a big enough portion of their kids were Medicaid kids. DHS finally did a legal opinion, figured out it was incorrect, and sort of getting the money back. But it's another example of getting as much federal money as you can, whether
Right.
you're really entitled to it or not. And the big question, at least, is if the state does get in more money, well, for gosh sakes, at least, aren't you going to use it for the services for the people for whom it's intended? And one big glaring thing we see in PMAP and also in Minnesota Care is the money that these HMOs get for dental services, but people are not getting the services that we are paying for because despite having all these excess profits, they choose to not pay dentists very much. So not many dentists participate and people can't get the services.
Oh.
And DHS has not even, the legislature has occasionally wrung its hands about this, that we better pump in more money for dental care. But interestingly, DHS had not been requiring the HMOs to actually give the extra money to the dentists.
And that would be a problem. That would be a problem. Now, I see
Right.
that you have here a document that you received directly from Ramsey County
Right.
with regard to that transferring of funds. So this isn't just some hypothetical that you think that that's the way it was occurring, but this is actually a legitimate document with the Ramsey County insignia on it, and it is from Ramsey County talking about the wire transfers.
Yeah, and the in black and white, Ramsey County is a conduit between Regions Hospital and Minnesota DHS. This wire is done to leverage Regions revenue to obtain increased revenue, to obtain increased funding. Regions wired the funds to us on November 1st, and they sent this on November 7th. So admitting that they're just channeling the money, but the channeling of the money hinges on the county, in so many words, pretending that they own and operate the hospital.
Right, because this could not happen without
Right.
the county participating, because otherwise there wouldn't be a conduit to be had.
And a fascinating thing for any auditors to look into, such as ones that Ramsey County might want to get going, like the state auditor's office. So this $500,000 a month that Regions wires to Ramsey County, how do they classify that expense?
Yes.
What is that money for?
Exactly. Now, in our last couple of minutes here, if we could put up the screen on the screen generator there, so that way our viewers can see how to get a hold of Buddy. It's got all the contact information, and once we get that up, then certainly, Buddy, I want to give you the last 2 minutes here to be able to say your last words of wisdom to our viewers.
Well, just realizing that this is a big problem. There's, like I said, a huge amount of money at stake, and although things are moving in the right direction, it's unclear whether they'll move as fast and as far as they really should. At the very least, those hundreds of millions of dollars that are sitting there, we don't think those should just be sitting there.
And I think we're going to zoom a camera in on this.
And on the website, you'll find links to download our report and other documents and reports of ours.
That's great.
So you can read these things for yourself by going to our website.
Right, and I think this is great that you've got this report available. I've had the opportunity of looking at it briefly when David Feinwalk was on the program, and it is a fascinating read. And so it's called Who Was Minding the Store?
I thank you for coming on, because it's something that's very important for us to have, and it's kind of a gift for our Christmas time to let people know what really is happening behind the scenes. Thank you for coming.
Yes.
Thanks for having me.
Well, and I hope sometime it might work out that you might be able to make the trek down here again and give us a follow-up on what's happening and how things are changing, if they're changing at all.
We know how government works, very slowly.
A lot more to, and how long the federal auditors will take for their investigation, we have no way of knowing that
Right.
either.
Yeah.
But they're digging, they're very serious about it. They've been there almost a year, and so they think there's something there.
Good. Excellent. Well, thank you again very much. And to our viewers out there, thank you very much for tuning in to the Citizens Reporter. Have a great holiday, and we'll see you again next Friday.
Happy holidays.
Bye-bye.
My name is David Feinwalks. I was for 30 years the General Counsel of the Minnesota Hospital Association. In 2010, I was fired from that position. The reason I was fired is because I asked the wrong question. The question I asked was the state of Minnesota using federal Medicaid dollars for purposes other than Medicaid? Were we using it to cross-subsidize non-qualified programs, maybe even prop up commercial insurance products or other things which were clearly impermissible? That was the wrong question. Minnesota in 2010 did in fact seek legislation to provide for a medical loss ratio for these public programs. During the course of that time, one of the fascinating things was that our Department of Human Services produced a fiscal note that discussed why that proposal would never yield any savings for either the state or the federal government. They said that any assessment on one of our HMOs in Minnesota, any payment of a penalty, a fine, a clawback, a giveback, would never benefit the government because it would simply be built into the rate calculation for the subsequent years and be returned to the HMOs. This is a strange assertion because, number one, it flies in the face of the notion that these companies are assuming insurance risk in their administration of these programs. And number two, it raises the question of why do these companies reserve in massive amounts against what appears to be non-existent risk. And so the fiscal note raised a number of questions. In July of that same year, I reported to the management of the Hospital Association that I believed that we had uncovered a substantial and massive fraud against the federal government. In August, on August 13 of 2010, I was asked to participate in a conference call involving our State Department of Human Services and an employee named Karen Peed. Ms. Peed was the Director of Medicare Managed Contracting. During the course of that conference call, Ms. Peed made the following statement. If you can't keep a secret, you have to leave the room, but we've been adjusting the reserve amount for state-only funded programs by making it essentially zero and increasing the amount for PMAP federal programs, blending the rate, and returning it to the insurers. Upon hearing this statement, I believed that all the pieces of the puzzle had now been assembled. We suspected that there was a massive fraud. Ms. Peed's statement explained the mechanism by which the fraud was being accomplished. I again went to the management of the Hospital Association and told them what had been discussed and urged them to do something. They did something. Within 60 days, I was terminated. Following my termination, I continued my advocacy on this issue. I returned to our state capitol and continued to lobby. In 2011, a number of bills were introduced, but the most interesting thing that happened in 2011 is one of our HMOs, UCare, said that they were going to give a donation to the state of Minnesota of $30 million, a giveback. This, coincidentally, was exactly the amount that the year before we had claimed would be owing as a clawback or return because of the elimination of one of the programs in Minnesota that was not a federally qualified program. When UCare announced the donation, as it was called and attributed, they distributed to a select group of legislators a letter explaining the reason for the donation. And the letter said that the money was being returned because Medicaid rates had been inflated to subsidize the program, which was now being eliminated, and therefore, since the Medicaid rates had not been lowered, they were returning what they characterized in their own words as an overpayment. Now, clearly, that's not a donation. If we fast forward another year to 2012, our media in the state of Minnesota got a hold of this letter, as well as documents related to Ms. Peed's statement and some other things, and began to take a close look and to scrutinize the statements which were made by UCare, and in fact the statements which were made by the state of Minnesota saying that this was in fact a donation and that the federal share was not required to be returned. During the course of these investigations, the media went to Commissioner Jessen and presented to her the Karen Peed statement as well as other documents and of course the letter that UCare had written. And they asked her if this would be defrauding the federal government. Commissioner Jessen responded as follows. Let me say two things. Let me be very clear. We're not doing it that way anymore, and Karen Peed is no longer in charge of contracting with the health plans. Now, this is an interesting and simultaneously troublesome statement because currently we are in part celebrating the return of $15 million to the federal coffers. But the celebration is a little premature, and let me explain why.
Dr. Feinwatz, can you close up here in just a few minutes or a few seconds?
In the last year, this return has been called a donation, a refund, and now an administrative expense, and it's the last that's most important. As an administrative expense, it's going to be built into the rate certification, and you're going to return half to the state and the HMOs next year. The $15 million they're giving you, you're going to give them back next year because there's no audits, there's no accountability, and there's no verification. Thank you.
Thank you, Doctor.